Okay. Do we have questions from the audience? Okay. Can you just present yourself, name and company? So,
Oscar Basabury with World Data Transactions. This is for PayPal. Um, can you give us a little bit of insight in terms of, from the regulatory perspective, as PayPal moves money across frontiers, what type of regulation is it under? Number one, and number two, as they keep deposits in accounts, let's say within the states and outside the states, what type of regulatory rules are you abiding by?
thank you.
So I think I'm not the most qualified to talk about regulation, but clearly we, as you can see, being present in 190 countries, there's a lot of different jurisdictions that we are subject to and that we abide by. Very simplistically, for example, in North America, there's a e-money transmitter license that we have in each and every state. So essentially, it's on a case-by-case basis. We look at the different regulation that is in place. If you look at the way PayPal has expanded globally, right, the biggest use case has been eBay. So initially, it's a matter of enabling buyers and sellers on eBay in a market which has eBay. But eBay, as you know, is probably present in 30 or 40 countries. In the rest, one of the first things we enable is cross-border trade, which is, say, for example, in Brazil, you have a lot of small merchants, sellers here who are listing on eBay in the US. So you have US buyers buying from Brazilian merchants, so they need a means to withdraw those funds into their bank account. So that's what we call first phase ACH out, which is withdraw to a local bank. So depending on what is the use case that we are enabling, we look at what is the kind of regulatory approval that we need. And typically we classify all markets in what we call send countries, that a user can send money using a credit card, receive, and withdraw. And if you go to paypal.com/worldwide, it lists our capabilities in all these countries based on the local regulation.
Other question? Because I have some, so if nobody asks question, I will.
This is Pankaj Shroff, Tell Labs. Lars brought up an interesting set of examples in Far East. Sort of showed us what's in the future for the rest of the world, probably. But I noticed that a lot of the examples, in fact, I think all of them were showing payments and transactions for services or content or product delivered to the end consumer. And it seems like there's a lot of focus also on person-to-person payment, which definitely PayPal and Nokia is focusing on. How does the market split up in terms of opportunity and perhaps geography in terms of, is this a developed market scenario where product is what drives transaction volume versus emerging market scenario where person-to-person payment drives transaction value? What are the driving factors between these two sorts of baskets, if you will?
Can I just add just something to your question? It's just very interesting because we have mobile money concern mobile banking, mobile payment, mobile commerce, P2P payments and stuff like that. So what's the vision? As understood, Nokia is very interested into the end bank market, making transaction from people to people. PayPal has probably started with e-commerce, but today is also doing P2P finally. So I don't know how it's in Japan, if like it's products are bought from the phone or it's more services, content. What is the segmentation? Is like developing country has P2P and developing countries has mobile commerce coming in, like in Japan, for example, or we have countries like Brazil have like both realities, let's say. So what's your vision of it's going to be the future and who's going to do what where? tough question.
Nokia has to know the answer to that after all the research that you did.
So,
I was giving him the easy one.
so on a Nokia perspective, it's we think that these mobile financial services are driven by multiple angles. So ultimately, the consumer wants to be able to pay basically for electronic content, for physical goods, and also to interact with, with the bank, with insurance, with the government. So they want to do everything, but when we looked at that with a lot of consumer survey in all direction, we realized that in developing countries, the need is such that there is immediately a market for anybody who can fulfill that demand. And so while in developed countries, it's a bit more complex because you have an ecosystem to make work together. So, if you are PayPal, you piggyback on eBay. If you are, NTT Docomo, you're working with the transit company. So it's a more complex ecosystem to kickstart. So that's why we said, developing countries seems to be more interested by that. I think there is a second angle to that, which is, the distribution network is important. In developing country, the fact that there is no bank distribution network yet, the banks don't have the reach. The telecom distribution network can be used for that, and in that sense, it's bringing another dimension to the value proposition. That instead of walking 5 miles to reach the branch of the bank, I can go to the guy who is selling me a phone here or selling me a SIM card there. So that's why we think that the market is going to start maybe more aggressively in those geographies. But ultimately, we also think that the money and the financial transfer needs to happen for those people who have the money to people who don't have yet the money. So it's going to go from the bank to the unbanked. And so connecting those two worlds is essential to the play. It cannot just be, it's a developing country for those people who don't have a bank account yet. It has to be connecting, the existing Visa, MasterCard, PayPal, bank network to those people who don't have yet these networks.
I think just to add to that, so just to clarify, if you look at PayPal transactions and volume and revenue, large majority of our transactions are actually merchant payments. So P2P is there, but it's a minority compared to where most of our volume gets driven. But getting back to the question of where is this going in mobile payments, I think, so if you look at emerging markets, right, 80% of the payment flows, if you look at kind of overall GDP and payment flows, 80% of the payment flows in emerging markets happens through SPs, SMEs, small businesses. If you look at where the pain point is, I mean, typically most of these, well, Brazil's a bit of an exception, but most of these emerging markets, 90% of consumer expenditures happen in cash. So the pain point is really cash replacement. And if you couple that with the SP, SME segment, that's, I think, the sweet spot as to where this is going. I think P2P was a good kind of 1.0, but when you go beyond, it's really about merchant payments, and especially in the SP, SME segment. And if you tie that back into PayPal's legacy, then it was really giving small merchants on eBay the ability to receive payments through credit cards, relationships which a traditional bank would not give them because of the different thresholds, collateral, et cetera, that's needed. So I think that's kind of where all this is going, at least in emerging markets, is